Very much for the kind invitation to speak to you today about the DNFBP space in Pakistan and how financial crime intelligence can help the AML process. I'm very happy to be with you. My presentation today will cover just a few short topics, but that I think are critically important in the DNFBP space. And quickly we'll overview what that means. We'll talk about some of the risks and gaps in Pakistan. And then we'll have a look at what the US perspective is versus the Pakistan perspective in this area. We'll talk about some case examples, and then we'll talk about some risk and risk assessments. And then we'll end with an analysis of how financial crime can help in the AML space. So very quickly, I think there's a lot of misconception about just how broad the DNFBP space really is when we talk about financial crime and particularly anti-money laundering law. It is actually the biggest group, the biggest sector. And it incorporates all the entities from casinos, which although they don't apply to Pakistan, are part of the group, real estate, precious metals, precious stones, particularly diamonds, lawyers, notaries, accountants, and all the professional people that work within those groups as well are their own subsector. Trustees, incorporators, directors, officers, what we call registered and records offices, and beneficial shareholders, which are shareholders of a corporation that may not necessarily be evident in the AML regime. So we'll talk about each of those and the types of risks that they present. So what I did first off is I created this chart that kind of analyzes risks and gaps in Pakistan in the particular group. And I structured it in such a way that it was really evident from all the groups that you know what we're talking about in terms of sectors and subsectors. Now the yellow represents areas that are considered high in terms of gaps and in terms of risks. And because there were gaps that have been identified by FATF and others, they represent high risks areas to think about. But what I like about this chart is when you look to the very end, when you get to things called what I call shells and trust services, which is trustees, incorporators, officers, directors, partners, and the R&Rs, and again, that's registered and records offices for companies, and then shareholders in name only, you can see how as a group that is extremely high risk. And just to break it down a little bit, shareholders in name only, under trust and shell corporation entities, those are shareholders that may appear on name in a corporation, but aren't the actual people behind it. And that's really important when you look at money laundering or terrorist financing, because a lot of the structuring that goes in place to make sure people can launder money, unfortunately, is through using things like shareholders in name only, using registered offices where there's actually no office there, but it's just an office that looks after corporations so that you can't actually find a person behind a corporation, the incorporators, which are the agencies that incorporate on behalf of people, and then trustees, an even more less visible entity. And then from there, we move on to lawyers, high risk, notaries, accountants, professional employees of notaries and accountants, and lawyers. And then we move on to different sectors all on their own: precious stones, metals, real estate. So what I did on the column at the very end in green and light blue is I sort of went down kind of the key areas, whether or not that sector is abused by criminals, whether training is adequate, whether the entities within that reporting sector are de-risking appropriately, whether they're undertaking investigations, whether their record keeping is lapsed, whether they have suspicious transaction reports that are being adequately done. And you can see all the way up how that looks. So the reason why I did this and why I think it's an important guideline for anti-money laundering professionals to look at is it kind of gives you a sense of, regardless of what sector you're in, whether you happen to be a financial institution that provides services to these entities, or you're a government regulator, or you are in one of these sectors, you have a really quick guide as to know whether or not there are risks and kind of what areas you need to look on to assess those risks and deal with them in terms of a mitigation factor. So I said I would talk a little bit about the types of risks within this sector from Pakistan's perspective and then from the perspective of the US government, for example. And many of you in the audience may know that the US government released its annual report not too many days ago, I think about a week and a half now. And their annual reports look at every country's risks in terms of money laundering and also narcotics trafficking. So it's a very particular report, but it's really well done for most countries in terms of money laundering risks. But what you may not realize is that most countries in the world and most big financial institutions, most lenders, they look at that report and they use it as a judgment with respect to their view of Pakistan. So it's really important for people in Pakistan to realize that the US risk assessment plays such a key role on how they are viewed from money laundering risk. So when we look at the US risk assessment that came out a couple of days ago, what they pointed to was that Pakistan is high risk for narcotics production, high risk for trafficking to Mozambique and Indonesia, high risk trafficking from Afghanistan and Iran. And in fact, I think one of the things they said was that in terms of narcotics trafficking from Afghanistan, 45% of Afghanistan's narcotics trafficking lands in Pakistan. They also looked at the black market economy, which I thought was really important when you tie it into the fact that in Pakistan, financial inclusion is quite a large problem, with up to 85% of people not able to obtain a regular bank account. They looked at money services businesses, trade-based money laundering, and what we looked at just on the previous slide, lawyers, accountants, jewelry traders, and trusts. And then when you look at the Pakistan list of what are money laundering risks, it's somewhat different, but you do see that narcotics trafficking crosses over on both. But in terms of Pakistan's view of what were internal risks to it, there isn't too much of a crossover. So I just thought this was really important to keep in mind, because what you may view as AML professionals as risks within your own country, totally legitimate. It's the way to do it, but it may not necessarily correspond with what other global financial centers and other countries are viewing when they look at Pakistan in terms of risks, because trade is global. So you may not realize the impact that some of the activities in your country have on other countries and the global financial system. So I think this is really important to keep in mind, that there's a crossover and they both impact each other and are both vitally important parts of the whole AML picture, even within your country in terms of risk mitigation. So I wanted to kind of go through this slide a little bit more with you. What I did is looked at some case studies in the last couple of years, some just in the last couple of months, two of which involved Pakistan to some extent, and kind of walk you through a financial crime case, because I think it's helpful to understand all of the different parameters and what may make a situation risky for a bank, for a law firm, for a trust or advisory firm, or even for like a securities regulator, for a government agency. If you had some example of kind of start to finish what cases look like and what ended up in court as a money laundering case. So starting at the very end, the case that involves Pakistan and the United Arab Emirates. This case here, you can look it up if you want it. It's quite well known. It's a Pakistani native named Aziz Mirza, who ran a number of different Ponzi schemes. Actually, it was in Canada for quite some time, as well as the United States. He's now in jail in Dubai. But what he did was he ran a number of different schemes, including initial coin offerings, where he asked people to make some donations. He relied a lot on Islamic finance, in which he alleged he was engaged in Islamic finance in order to provide some comfort to people in Pakistan. He also said that he was doing a charity to feed people during Ramadan. So he pushed all the right emotional buttons in order to get an enormous amount of money advanced to him. Unfortunately, he only used it on his own lifestyle. He had a fairly luxurious lifestyle, no job, private jet, boats, private apartment, Arabian horses. So he had no job, but an enormous amount of wealth. So the red flag is that inconsistent income and spending pattern that didn't match the actual employment and the actual functioning of the job. And he is a person who used an elaborate corporate structure to move money around, where it wasn't necessarily evident that he was the person behind a bank account or evident that he was the person behind a number of corporations. If we move now to beyond him, where it says Canada and Pakistan, a very similar case, except that this individual who's now in jail in the United States engaged in cyber hacking to quite a significant amount of money, who was arrested in the United States, but he worked with the Korean government. He did some of the WannaCry extortion. In all, I think that they extorted $1.3 billion from different companies around the world. 6.1 million of it was from the Bank Islami Pakistan Limited in 2018. And he was a professional, is always in jail now, professional money launderer. So his job was to take Bitcoin and other funds that had been raised through extortion in the hundreds of millions and exit it from a digital currency exchange, run it through different bank accounts in Romania, for example, in Malta, in areas where they're pretty much AML relaxed, and was able to move money around for the people that were behind the hacking. So again, a corporate structure that was pretty sophisticated. The other case beside it is a judge who was politically exposed. Beside it was a person in Taiwan who got some fake loans out from banks for a university that was very much fictitious. And then beside him is a man from New Zealand who was engaged in human trafficking. So some examples for you to have a look at, and as takeaways to kind of get a sense of what the red flags were on these cases for money laundering and how it might play into your own typologies and your own cases that come across your desk to help you beef up on AML compliance. So this slide here is a real corporate structure that I built for a legitimate corporation a number of years ago. I've anonymized it so that all the different corporate entities are not the actual corporate entity, so that I could share it with you. But it's really interesting because in M&A and the mergers and acquisitions world, when you're dealing with large corporations or when you're doing transactions, this is normal. You would normally sit down as an advisor and create this number of corporations for an entity. You would do it for legitimate purposes, as I indicated on the slide, because you would be assisting with tax planning, which is legitimate. You would be trying to accommodate financings, and you would be establishing corporations for different types of assets. So this is normal. However, what happens in the money laundering world is that organized crime and sophisticated criminal groups, the 'Ndrangheta being one of them out of Italy, they use the same type of corporate structure. But the reasons they use it for is to make sure that if you're a bank AML officer or a lawyer or a trustee or a regulator or government agency, that they're betting on the fact that you probably don't have the sophisticated skills to go anywhere beyond the first layer. Here I say Trinkets Inc. You can see the top blue line. But what you really want to know is if you get to the bottom where it says Trinkets Vancouver storefront, if you go into that store and you suspect it's somehow involved in money laundering, you'd have to do an enormous amount of due diligence to work your way up to find out who actually is behind Trinkets Inc. You'd have to break the barrier between Canada and the US and go to the Cayman Islands, go to BVI. You may or may not be able to get those records because they have shareholders and officers and directors who are hidden behind all the areas we looked at earlier, the incorporators, what we call the R&R services, the trust services. So this is a really good example of what money launderers do and sophisticated criminal organizations, but not to judge it. It's also clearly what large sophisticated organizations do who are not engaged in criminality. So it's just to let you know that when you're dealing in financial crime, you have to kind of get ready to frame yourself in the sense of it is sophisticated, difficult work often, and you're going to have to deconstruct organizations and plans like this to find out who's behind criminal transactions. So in terms of what's necessary to really have a solid anti-money laundering area and compliance in this particular area that we're dealing with, which is the DNFBP space, on the big picture sense, I think one of the things we've learned from Canada and other places that I think would be relevant to Pakistan is what was really missing in Canada, for example, was just knowledge of what the law was, because it was written in a way that was really not very clear, not very easy to understand. And I think in the AML world, we suffer from the fact that the laws are they're not really all that transparent and easy to follow. So one of the things we did do was create manuals in plain language for people, provided a lot of training, formed AML associations and groups to have shared knowledge and shared intelligence. And I think that really helped big picture get a grip on ways to deal with the risks that are presented in the ecosystem. And then I think when you just look at the small picture view, kind of drilling down to what the problems are in Pakistan and maybe to focus on some areas that could use some improvement, is if you go back to the chart where I created with all of the yellow boxes of high risk and what those areas are and why they're high risk. I think if you were to focus on the high risk areas, which are the yellow squares, and look at the US assessment as areas to improve, looking at lawyers and accountants and then the jewelry sector, narcotics, things like that, that would go a long way as well to make sure that this particular space that we're talking about becomes more compliant in terms of its AML regime and really has the tools in place to kind of move beyond and lead in this area. So I wanted to just finish really quickly on financial crime intelligence for the space, because really a lot of the world is moving towards not just looking at suspicious transaction reports, filing them with the FIU, and then just never doing anything more than that. But I think what we're realizing in financial crime is that we have to get a lot more involved in investigations and financial intelligence. So banks are looking at financial intelligence, securities regulators are law enforcement, border and customs agencies, particularly. And what it does is it, instead of just looking at anti-money laundering law from the perspective of, and even terrorist financing, from the perspective of there's one bad actor that you're looking at and you're analyzing, you're filling out a suspicious transaction report, it's more like taking a step back and looking at one bad actor and 20 of the people around that bad actor to see if you can find patterns so that you understand the whole of a criminal matrix and you can provide better suspicious transaction reporting to your FIU to help the FIU help law enforcement, help the whole country. So that's kind of a nutshell on what financial intelligence is in the financial crime sector. And here's an example of using network analysis in the same space. This is an actual real network analysis picture I didn't do, but a bunch of researchers did looking at Mexico. And they looked at one of the major drug cartels and they plotted all the decision makers, the drug lord, all the drug lords, captains of industry, the money movers, the money launderers, everybody who helped in the ecosystem. They plotted them all out. And each circle is a person and each circle is a node, we call it. And so you can see that in a structure like organized crime, because narcotics is a big issue in Pakistan, you'd have the same type of a thing. In organized crime involving narcotics trafficking, there's one kingpin. So the kingpin we can see is in the middle, all the decisions radiate out from the kingpin. So it's really interesting because you can see that decisions and money go through this kingpin. If you were to eliminate the kingpin, you'd have some sub people on the side, but you would effectively destroy organized crime. So that's kind of the theory behind why you do network analysis when you're doing anti-money laundering law compliance for your FIU, is because you want to be able to assist law enforcement, and law enforcement does this as well to be able to assist themselves in finding out who it is that they need to target in order to deal with some threats to the economy. Here's an example in the white collar world, again, a real life example. I didn't do this graph, but I found it to share it with you. It's of the Bernie Madoff securities fraud in the United States. So these are not criminal actors per se, but they're organizations that were involved and were impacted. And Bernie Madoff is the green dot that you see. But what's interesting about this slide is that you can see that when it comes to looking at financial crime in the white collar world, it's very different than narcotics criminality, in the sense that in the narcotics criminality world, it's very tight, very centralized. Whereas this is a little bit all over the map. If you were to take off one player, it doesn't necessarily spell the end of the organization, although in this particular case, it did. But it kind of gives you an example of the tools you can use if you start to use network analysis in your whole financial crime mitigation picture. It really does help you get a sense long-term of where your threats are and how you can address them to become much more sophisticated, much faster, and much more compliant in the AML world. So AML using network analysis, again, it's a really effective way to build up expertise. And really, once you start it in one type of an organization, such as at a bank, or if you use it at a government agency, eventually they'll be connecting with each other. And it's a very effective way interagency to share intelligence and much quicker get a grip on what is happening in a country's picture in terms of financial crime. So that's the end of my presentation. I hope I didn't rush too much through it. And I thank you so much for having me. And if anyone has any questions, I hope you'll feel free to email me and I'll be happy to answer at any time. Thank you so much.